Most Forex traders are losers because of the strategies they approach. And I'm here to tell you the exact strategies that I use to win. They're losing because they can't sit still. And the Forex market is a sitting still game. The strategy I use for the firm is simple. And that's exactly why most people can't execute it, because they try to overcomplicate the strategies. I don't chase movement. I don't trade every session, and I also don't need action to be productive or feel productive. I use a higher time frame direction, so we change this to a 1 day or 1 week. A clean and simple structure, which I will draw up here in this video. And I have zero emotions towards where we are going, only confidence in how I approach it. This is where retail traders get very impatient because they're coming into this market to win massively every single day, every second, but they come to find out that this isn't the game to play. We wait because waiting is part of the process to bridge you to that success. Some of my traders, especially some of the best traders I have, use the hike and ash you. Me personally, I just look for regular candle closes, but you can use the Heiken to really indicate the future for Forex market. It's not so much where to enter with this certain candle structure, but it actually keeps you disciplined in order to actually enter the correct way. Entries in the Forex market are done on real candles, okay? And what the Heiken is we'll pop it up here on the video, read about it. Exits are done with real confirmation, and what the Heiken does is show you true candle structures and true confirmation. If you need constant stimulation, then Forex is going to drown you, because this is something that you're looking to stack and look for weeks and days ahead. This strategy isn't for everyone, it's just a filter. So watch what I do next. Step 1 in this video, we're going to find the trend. So let me take you through that right here. First off, I'm on the week chart. Let's move it down to the 4 hours so we can look at a closer confluence and put a better structure for you to see. Our 3 rules that we want to look for is first an uptrend, which we are currently looking at right here, right? We're currently looking at an uptrend very simply, and it's not hard to see that. Our first rule that we want to look for out of the 3 in our very simple setup is we want to look for an uptrend, and right now we are currently looking at that. The second thing is you want to look for a downtrend to see actually long term what we're looking at. But here we've consolidated quite well with the EUR/USD pair, and we're looking for retest of the uptrend. You can do this, and it's optional. You can look at the 50 to 200 day EMA and try to compare those with this uptrend. But also, price above is bullish, price below is bearish, right? So simply put, you want to get good entries, and this is speaking very clear to you on how to find entries. This step alone removes 50 to 60% of bad trades in the Forex market. Looks messy, then no trade. Right here, this is not a current good entry on a trade, other than we could maybe gamble on a short to see if it retests the uptrend that we're currently sitting in. But overall, it's sitting in this gap and it's retesting these highs, and it's done this 3 times now, right? We see 3 times we went up here and tested this 1.18 level, and it's looking to go for a breakout to 1.2. But you want to find the best entries possible, and those setups look for more volatility, they look for more price action, and you need to find out how to use those with the 50-day EMA. That's optional. I like to do it personally, and you can simply use indicators of that as well. Reading the 50-day EMA, this obviously shows you blue, yellow, and light blue, okay? All of these are going to show you 1 day, 10 days, 50 days, 200 days. There's very different colors in here, various different colors, and you can see them here listed. The thicker the color, the more longer it is. So this would be the 200-day EMA, this would be the 50-day EMA, the 10-day, and then the 1-day EMA, right? So the 200-day EMA is slowing its pace, okay? So overall on the 200, slowing pace, but on the 50-day EMA swing, it looks like we're actually still having a lot of volatility to the upside. That's where you're going to grab the MACD and the RSI to try to give yourself a confluence in between these indicators. This will lead you to finding your confluence and put you in a better position to enter this trade. My buy order I want to set for here, okay? So I'm going to go ahead and put in an alert, right? And I could even put that buy order and potentially even do uh, a multiple triggers on this as well, because it could actually bounce and test 2 or 3 times. But yeah, we'll come back to that when it hits, and then we'll be able to go in there. That's where I want this entry, and then in the next video on volume 2 of Forex trading, I'll show you guys where this went and how the trade went. Want to look at key levels and mark your previous highs, previous lows, and look for the 4 hour, the 1 hour, and even maybe the 30 minute if you want to get really close and really volatile high leverage plays. You need to find clear resistance and support. So let's go ahead and do that with this chart here. Okay, this is the 4 hour chart and we want to have a confluence. So first off, we have a nice support level here with the UER. We also have a support level listed here, and this would be a retest of the lows. Okay, and now we have resistance on the upside at the 1.8 range, like I mentioned earlier in the video, and we can mark this up simply like this as resistance. And now let's add the second part of the confluence where we're looking for lows and we're looking for highs. Okay, let's do this very simply here. Here's your lows, 1, 2, 3. Okay, and then here's your highs, current high, previous high, and then other previous high. This would be the weekly high. As we're looking at this, we've seen a retest of the previous highs or attempts multiple times through this confluence. Once, twice, 3, 4, 5, 6. You can see 7.
6, 7.
Look for strong impulse move that caused the buy orders. Let's see what I'm talking about here. So as we've seen here, we had a trajectory to the downside, but the support level here was accumulated massively. And you can use buy indicators and buy orders to see these things. On the downtrend, a lot of people accumulated this level, and it led for a massive upside on this play. We entered this play down below here. We did get out at the first resistance level, which was here, the midway point, and the resistance came from this high, knocked us lower, and we actually sold out. That's why you see that we have some indicators here, okay? But we actually went a lot higher, and we're going to press that 1.9 range. And as you can see on the 4 hour, we're already taking that step uphill to hit that resistance. Those are the gambles that you take if you enter in a late play. So I most importantly put it into the hands of waiting and being methodical and having patience with my trades. Price on Forex, it doesn't react at random. It reacts off movement and patterns. So this is why we're doing this here. And let's go ahead and just remove all the drawings, okay? Leave the indicator, and we can see the 50 to 200, the 30-minute, all these time frames on the EMA and SMA swing. Okay, so now we're going to go to step number 3. If I didn't say step number 3 yet, if it was number 2, 3, whatever. Number 3, wait for a pullback. Patience, just like I said in the previous round of this YouTube video, you want to wait for a pullback. And now we already talked about where the support levels were and where the resistance levels were, okay? And that is exactly what you're waiting for. You don't want to be impatient. My grandmother always told me, patience is king. That's what creates kings, and that's what you're waiting for. You want to look for downside, and you want to look for a retest or a higher low of this exact structure. It already did it here. We actually exited the play here because we thought we could go and retest again the lows, okay, and the support level. It didn't. So it created a higher low structure and formed up. So now you need to wait for your entry or short the resistance at the top. Very simply put, both ways you can make great money on. We're going to take the shorts at the 1.2 range, the 1.8 range, okay, because we know there's going to be some resistance there. Closing it is going to be the obstacle to get around in the future. All right, now step number 4 and the final step is that you're going to drop to lower time frames and look for your entries. So since we have the 30-minute EMA, SMA swing, we're going to pull that down here. We're going to remove all the indicators, okay? Since we already know what we're talking about and what we're doing, we want to pull this down lower, okay? And I already have an assumption looking at the higher time frames, so I want to look for at least resistance or a pullback to the downside, creating a higher low structure on this exact chart pattern. You want to have 2 to 3 entry confirmations, okay? That's going to stack up and lead to where you're going to put your eventful long or short. Okay, and that's where I want to show you how to do this here. So step number 1 of step 4, time frames, look for higher lows. Just like I was talking about here, we've seen massive trajectory to the upside. We've seen higher low set here. Now there was a higher low set here. We already are seeing rejections at this point. So I'm going to wait for it to come down and have an entry at the higher low levels, maybe even to retest the consolidation zone that it previously had on the lower time frames. But this is going to be me DCAing into this play. I want to have a very, very good liquidation level, and I want to stay safe in this trade because my trajectory is for it to go and retest that high level again one more time. The second thing that you want to do is look for rejection candles, just like I just mentioned there. It's kind of funny that I'm saying all these things beforehand. I'm sorry about that. I just so used to trading. It's just nature to me. But you can see we had a rejection level sent here because we rejected this previous high. So we went, or this previous high, right? We rejected this previous high. So we're now pulling down and we're looking for a higher low, just like step number one. So step number one, look for higher lows. Step number two, look for rejections. We just seen a rejection. Our patience will waver massive winning if we can see this pull down here. Step number three, you want to look for confirmation of candle closes. Strong bullish or bearish patterns, look for injections, look for key levels of support, or maybe buy orders. That is going to come with me being patient and looking where we can actually enter the higher low and see if the confirmation is true. That is the final confirmation of step four that you want. You have three obstacles to go around. You have step number four, three obstacles. Look for that higher low, look for rejections, and then find key confirmations to the downside for entries on longs. Find key confirmations of rejections to the upside on shorts. So that's all for this video. I hope you guys enjoyed this very quick video here. And if you did enjoy it, leave a like, comment, subscribe. My name is Bag. I'm chasing bags of wealth every day and giving it to my community, creating a digital firm unlike any other. If you don't know, now you do. Check the Discord link in bio. Also, the remaining of this video is going to be sponsored by 2Bit. Make sure you sign up for 2Bit. Use Forex on 2Bit. We're going to be listing way more pairs on Forex on 2Bit. Thank you all for watching. I'm Big Bag. I'm out.